Good morning, good morning, good morning, everybody. It is 6:23 in the morning, Monday, January the 9th, and we are heading into a full week. Monday through Friday, we are open all 5 days. We have, as I threw out there on the email, a pretty hefty schedule of speakers. But most importantly, we have the China PMI and CPI. We have the US CPI. We have Powell speaking, which is tomorrow. And then on Friday, I forget what I put on there, but we've got a little bit happening on Friday, but nothing really with us, just a few speakers. Most importantly is we closed green. Hang on. Most importantly was the trade of the week that I table pounded all last week got you anywhere from over 50% to as much as 190%. I think there was one lucky entry that got there just above that 325 330 area on the entry. Worked out. As you'll see in the email, I have another trade of the week that I'm extremely confident with. It's paying pretty good right now, but I do think that you can get an even better entry if everything works the way I'm looking at, which is what I've showed there on my preferred view on the SPX. In any case, going back, yes, we closed green on Friday. We closed green up 87 points. An 87-point move and breaking through 3-week resistance to do it, hitting the 50-day moving average, closing at the 100-day moving average, is not a bullish move. It's a bullish day, but it's not a bullish move. As I've shown and charted back and gone back, we closed green twice in December. We closed green twice in November, going back to that November low. Off of that November low where we were extremely oversold, we closed green 3 days in a row. So the whole closing green back to back, 14 sessions here. We closed below the bear market line on 12 of them. We'll see what happens with today. And it is just one of those very skeptical moments about being bullish and why I've explained what I think is the big bear trap, how all the bears have gone bullish over the weekend because we broke resistance. Here we are at this 270 area on the QQQ. 3-week resistance, as I was showing there on one of the other charts. Right here, right up there at resistance. So again, nothing proven. We don't have anything that we can go table pounding and say, yes, we are going higher. Here's our SPY looking back at 3 weeks plus. Right up there, we broke through this resistance. Obviously, we had this resistance down here, right in this area at 386, 388, 387. And here we are pushing the 50 retracement, which is the August high and the October low. Right at this pivot right here, right at 390, right at the 50-day moving average. Nothing to really be excited about. But again, having displayed this multiple times, how VIX down here at 2102 is not very friendly for the bulls. What we had over the weekend was a very convenient gap up together with the market gapping up. As right now, I'll get in there and show you in a minute. We are at the moment, we are up 13 points on the ES, 30 points on the NQ, almost 100 points on the YM, 6 points over on the Russell, just coming to that November 9th Biden win pivot, 18-15-30. But you see these Keltner channels, how they're starting to point down over here since 4 o'clock in the morning. And these lower Keltner channels are extremely pushed to the upside from that move from Friday. These typically do not work out to be very powerful days. On the ES, we're looking at that 39.13 to be the area of support, right around 38.80 over there on the SPX. But as you can see over here, we have a pretty dirty running divergence on the 60-minute chart on the ES. You've got the exact same thing over here on the NQ. and the exact same over here on the YM, the three most powerful. So MACDs have already crossed over bearish on the over here on the Russell and the YM. So I would be very, very cautious about being bullish, but at the same time, I would be very skeptical in my position sizing about being bearish with Powell tomorrow. We have no guarantees whatsoever that he will mention anything about interest rates or the U.S. economy. We know absolutely nothing about what he's going to say. He could come out and talk about ham sandwiches. He could come out and talk about, gefilte fish. We don't know. All it is that it's very interesting how we broke resistance on Friday. We closed green. Here we are on Monday. And the typical Taco Tuesday, which is tomorrow, he just so happens to be scheduled twice. I don't see anywhere where he's speaking in two different places, but he's speaking on the schedule at two times, 4:30 in the morning and again at 9 o'clock in the morning. So again, skeptical that we continue to the upside for now. And my preferred view is still that one that I was showing, which is we get a little bit of a break to the downside, and then we head back up. Here's our dollar. Here's our DXY, and I'm going to show you in 1 second here. Here's the dollar, the DXY, pushing right on this 103.40, right at the bare bones minimum right there for the dollar. That breaks, and the dollar collapses, and everybody should be rushing out of the bond market and over into the stock market, over into the tech market. Come over here and show you one of my screenshots I shared with Pedro over the weekend. I have the 10 year, the TNX. I have it completed, where it's completed 1, 2, 3, 4, 5, and now it's pushing right there at that 34.04. And we break 34.04. I'm looking for it to be falling back to right around 32, 31.50, and we break 31.50. We're going to be looking down there at that 28. Now, we're not going to get down to that 28 anytime quick. I'd still expect it to be right around 32, which would mean they're implying that the interest rates in 10 years are going to be around 3.2%, which would mean you have a Fed pause, which would mean you have a fantastic CPI report that comes out on Thursday, and that is when I want to be bullish. I want them to give me a dip here Tuesday so that I can tip my toes back into some calls and be able to be in a bullish position for Friday off of that CPI report that we're going to get on Thursday, because in my opinion, it's going to be below 6. Sorry to take up so much of your time this morning. I hope you enjoyed the videos over the weekend, and I will see you in the chat room prior to the opening bell.